$1 million question. Bank of Baroda should be sold. Increased its repo rate to 6.25%. We will look into 2, 3, 5, 4, 5 parameters. Have much more deposits. Hi. In today's video, we're gonna analyze $1 million question that whether Bank of Baroda should be sold or it should be kept at the current levels, as it has already rallied 200% from its COVID levels, and along with the other PSU banks. So the PSU shares have given up a significant return from COVID, along with the PSU banks and also the general PSUs. So let's talk about the market in general. That few months back, the RBI has increased its repo rate to 6.25% to curb inflation, and similarly, the Western countries, along with US and Europe, will also follow a similar pattern by increasing their interest rates as their inflation is going out of control. So the Fed is expected to increase its interest rates by around 25 to 50 basis points in the upcoming months. So why I'm talking about this. So this is generally relevant because as soon as the Fed increases its interest rates, we see a fall in the stock markets, as a lot of people tend to pull their money from the stock markets and keep it in the bond yields of USA. So in short, when the bond yields increases, it creates a positive impact on the banks because they have much more deposits, and it also increases its net interest margins. But in the short term, the money gets drawn out of the stock markets, and we see a correction. I'm not saying that we'll correct in a 1 month or 2 month. I cannot predict that, and up till which point we will correct, I cannot say that. But it is a historical trend that we have observed. So if we look at the Bank of Baroda stock right now, we will look into 2, 3, 5, 4, 5 parameters and analyze whether this stock is really a very great compounder, consistent compounder, or it has generally just shown a great rally and it should be sold at this point, right? So talking about the Bank of Baroda stocks, one thing we should keep in mind is that in 2020, Nirmala Sitharaman, the finance minister of the country, said that they will introduce a bad bank in the economy, which will absorb all the non-performing or bad assets of the PSU banks. So the PSU banks, which are showing a significant less amount of NPAs in their bank account, in their balance sheets, is because of the bad bank introduced by the finance minister of the country. So what we are seeing a great run up in these stocks is because of one, their revenues have increased, their profit has increased because of a decrease in the net performing assets, and also obviously the reduction of the bad assets in its bank. So we'll see the uh, stocks of Bank of Baroda, and we'll open screener.com. And as of now, we see that the current market price is 186 rupees and it has a book value of 178 rupees. So in short, if you don't know book value is basically if a company sells all its assets, all its liabilities, and the money it generates from it, the net surplus which it generates from selling all its assets, all its liabilities, and divided by the number of shares outstanding in the market. So the what will be the value of that one share is equivalent to the book value. So it is basically all the assets. If the company liquidates all its assets, everything, and divided by the number of shares in the company, then it is the book value. Then we calculate the book value of the company like this. So we see that it has exceeded its book value by around 8 rupees, and recently it has also started giving a dividend of 1.55%. So if you look at the chart of Bank of Baroda, we see it has a lifetime high of 216.17 rupees, uh, in 23rd January 2015. And now if I see the balance sheet, the profit loss of the company in March 2014, the revenue of the company was 40,463, and now it has increased to 73,385. So I'll say in around 8 years, it has not even doubled its revenue. So if in 8 years you are doubling, you are not even doubling it your revenue. You are not even, I think, beating the inflation, right? Uh, it's around, you are compounding your revenue by 6 to 7%. And in India, the inflation is generally around, it will be always around 4 plus minus 2%, depending upon the state of the economy. Now, if we see the net profit of the company in March 2014, where it has shown its ultra high levels of the stock price, it was around 5036 crores. And in March 2022, where it is still less than its all time high, it has a profit of 7933. So still we are seeing that the profit has not even doubled. It has around only what should I say, 50 to 60% increase in the net profit in the last 8 years. So in the last 8 years, if you were increasing your net profit by around 60%, so generally I would say that you are compounding your net profit by around 5 to 6%. That's not even beating the inflation of the country, right? So if I see the other things of the Bank of Baroda, one thing is that if you see the borrowings of the company, the borrowings have significantly increased. It has almost doubled from 2014 to 2022, from 6 lakh crores to around 1 lakh 185,000 crores. And if I see now the net cash flow, or the so in 2014, its net cash flow was around 46,654 crores, and in 2022 it is only 1567 crores. So the company has not shown a very I would say a consistent uh, profitability or increase in revenue. And if we see its return on equity in 2014 was around 14%. That's really very nice. And in 2022 it's 9%. So one thing is that if in 2015 around 70% market share was with the PSU banks, and now from 2016 to 2020 there was a very bad phase in the PSU banks, as there was a lot of NPS. So its market share has drastically reduced from 74% to 54%, and it is more likely to get diminished in the upcoming years. And I'll tell you why. Because if you see the top banks of the country, HDFC Bank, ICICI Bank, Kotak Mahindra Bank, they are compounding their loan book, they're compounding their revenues by 20% from the last 20 years. They're compounding the profit by 15% from the last 15 years. So even if they are not showing a significant price movement at this point of time, they are still increasing their business. They are still increasing the market share in the banking industry. So as of now, the market price which Bank of Baroda is showing, I think it has already given a significant return. And as a disclaimer, I also have few shares of Bank of Baroda, only 42. I bought it at around 82 rupees, and I'll be selling it in a day or two. I'll put a screenshot of it on in the description. So basically, I think when you have a lot of good banks in the market which are compounding their loan books by by 20%, 25%, you should just go and invest in those banks rather than uh, investing in these PSU banks. I'm not saying that these PSU banks will not give you a further run up. They can give a further run up. I'm no expert, but according to my diligence that, according to my inspection, what I consider is that when we have good opportunities in the market, and the HDFC Bank, ICICI Bank, they are not at their all-time high levels, and they have not shown that much significant price movement in the last 2 3 years. So it would be a better option to invest in those assets, as they are already available at a discount in the market. And if you see their financials, and if you see their business, they have significantly improved their business in the last 2 3 years. While I'll see of HDFC Bank is the only bank in the market which has increased its market share from 7% to 11%, while all the other rest of the banks, they have maintained their market share, which was before the pre-COVID level. Only HDFC Bank has increased its market share. So I'm not advocating to buy HDFC Bank, but I have HDFC Bank in my portfolio. But I'm just trying to say that when we have other better options in the market, why we have to keep stock which has given a significant return, but it has not given a significant uh, return in its profits as compared to its share price. It has not, its business has not expanded to that extent as soon as, and in its stock price, its return on equity is has not increased, while it has already decreased from 2015 level. So that's what I would like to say on Bank of Baroda. That and you can make your own due diligence after that. Thank you. And if you like this video, please put a thumbs up on it. And if you find this information useful, please share it. Thank you. I'll see you again.